first things I want to mention to you is I want to talk about the Social Security Fairness Act that was signed into law in January of 2025. And in essence, what it did was it got rid of the windfall elimination provision and the government pension offset. So now, if anyone has worked for a employer who does not pay into Social Security, as long as you have enough quarters of coverage and you qualify for a Social Security benefit, you get that full amount depending on at what age you decide to take it. It is not a reduced benefit because you worked for an employer who did not pay into Social Security. And that went into effect it was signed into law in January of 2025, but it was effective with January 2024. So anyone who was affected by either the windfall elimination provision or government pension offset, we went back retroactively and paid them the difference in their benefits for 12 months or the amount of time to catch them back up to what their current benefit amount should be. And now everybody, you get whatever you see is in your My Social Security account. To put it simply, there is no reduction because of windfall and no more reduction because of government pension offset GPO. Again, I am very interactive, so please feel free to put your questions in the chat if you have any for me, along with raising your hand whenever you need to speak out and say, hey, I got a question for you. I'm okay with that. One of the first things that I typically tell people with regards to Social Security is that it was never designed to replace your pre retirement income. It is only going to replace approximately 40%. So, what does that mean for you? It means that if you know that 40% of your income is going to come from Social Security and retirement, start thinking about your other sources, such as are you going to get a pension from your employer? Do you have VA compensation? Do you have a 401k? Do you have money in your savings? And the question you need to ask yourself is, will it be enough to sustain me in retirement? Because most financial planners are going to tell you you're going to need somewhere between 70 to 80% of that pre retirement income to live comfortably in retirement. And so I'm hoping that by the end of this presentation, you will have a better idea of what the Social Security piece of puzzle will be for you. The first thing that I do want to promote today is our Go Digital campaign. So if you have not already done so, I want to strongly encourage you to please create the online My Social Security account for yourself. The requirements are very simple. You just need to be at least age 18 or older. You need to have, of course, a Social Security number and a valid email address. On the screen here, you're going to see that QR code. And if you were to take a picture of it with your camera, it's going to direct you over to the Social Security webpage or website so that you can decide to either log in or create that My Social Security account. And now you have to utilize either ID.me or login.gov. So you need to have one of those accounts already established for yourself. And then you're going to log in and tell us which one you're going to use. Use that username and password. We'll verify your credentials, and then you will be able to access your Social Security information. And of course, when you do visit our web page, because it's been recently redesigned, it's going to look something similar to what you see here on the screen, with easy to read tabs showing you that if you want to look at, retirement, or if you're searching for information on Medicare, click that tab, and then it's going to give you quite a bit of information that you would be able to peruse through so that you can be well versed in that topic here. And so some of the things that you can do behind the My Social Security portal. Well, number one, if you ever need a replacement Social Security card, instead of making an appointment to go into your local servicing office, you can open up your My Social Security account, select the option for replacement Social Security card, and then you're going to give us information from either your state issued driver's license or your ID. Once we verify that information with DMV, after everything passes, then in 10 to 14 days, we will mail you that replacement Social Security card. Other things that you can do behind this portal is if you ever needed to update your address, telephone number, start or change direct deposit, you can do that here. If you ever needed to request a benefit verification letter, you can ask for that through your account here with from the comforts of your own home. Those are going to be a few things that you can do. Also, if you ever needed to look at letters that Social Security will send you in the mail, we call those notices. You will have your very own repository of any of letters that have been sent to you. So if you need to go back through those, if you're searching for something, that's a good place to start. One of the things I usually try to recommend to individuals is at least once a year log into your My Social Security account, because I want you to review your earnings record or your earnings history. When you see that earnings record, you want to be sure to expand it all the way out so that you can see all of the years that you've worked, and what it'll show is a year and the gross amount of earnings that was reported to Social Security for that year. And to figure out which employer reported it, all you have to do is just click on the year and it tells you who reported those earnings for you. Now, as you're looking through those earnings, if you notice that there is a discrepancy, there is now a way for you to upload either a W-2 or a return that will send us an alert for us to pull this information in, so then we can review those earnings to determine whether or not we need to make any corrections to them, because it may make a difference when we go to calculate how much are you going to get from Social Security. Also here, if you ever needed to apply for retirement, Medicare, disability, file an appeal, and of course, track the status of your application. You can do those items as well through your My Social Security account. And in addition to all of that, if you ever needed a replacement Medicare card or a 1099 or 1042 for tax purposes, because today is April 15th, you can get that here from the My Social Security account so that you would have that information for your tax return. But that's just a few things that you can do behind the My Social Security portal. So when you're thinking about retiring with Social Security, it is a very personal decision, because you have to figure out what is the right time for me to take my Social Security benefit, because for everybody is different, because you need to take into consideration what's going on in your family. How is your health outlook looking? What is your financial situation, to figure out when do you want to take your benefits. The earliest that you can start to take your Social Security benefit is at age 62. And if you elect to take that option, please be aware that the benefit will be reduced because you are choosing to take that benefit before your full retirement age. And that is a permanent reduction on the benefit. And then the only potential increases that you're going to see are going to be those COLA or cost of living increases. And those are usually determined by the Bureau of Labor and Statistics. And that's usually late September, October timeframe. And that's where that federal agency will go back and look at the last 3 quarters of inflation to see, has it risen to the point that it would warrant an increase in benefits? And if so, then beneficiaries would see their new payment amount in the check that they would receive in January of the following year. So the earliest you can take your benefit is at age 62. Or you may want to wait until your full retirement age. Your full retirement age is going to be based upon your year of birth. And I'll talk a little bit more about that in just a few minutes here. Or you may be that person who's trying to max out your benefit all the way up until age 70. And again, it is a personal decision for you to figure out, when do you take your money. So you can take it as young as age 62 or delay it all the way up to age 70. It is your choice. And this is where I'm always telling people to be sure that you're making sure that you're talking to your financial planner, your accountant, or your tax preparer, so that you and that individual can look at all possible scenarios or different what if scenarios to be able to figure out when is the best time for you to take your benefits. Because unfortunately, we at Social Security, we are not authorized to have those types of conversations with individuals. All we are allowed to do is tell you, if you take your money at 62, this is how much you're looking at getting. If you take it at 65 in 3 months, this is what you're looking at getting. Or if you're trying to max it out all the way up until age 70, this is what you're getting. We can't have those conversations because we're not equipped to do so. Another thing to think about is, once you do start to take your retirement benefit from Social Security, Do you plan to go back to work somewhere? Because if you are younger than your full retirement age, please be aware there is an earnings limit that you need to be aware of. And of course, I am going to talk about that a little bit later on in the presentation today. And I'll mention, what you need to look out for, so to speak. And then once you pass your full retirement age, then you can earn as much as you want. We don't care. Finally, we're going to talk about Medicare today. And what I tell people is that Medicare, it is not mandatory for you to enroll in it, but you need to be aware that if you do not enroll in Medicare at the first opportunity, you can enroll. Please be aware that you could be subjecting yourself to a 10% penalty for every 12 months that you wait or delay in enrolling in Medicare. So just make sure that if you decide you're going to get it in a timely fashion so that there's no surprises. So let's talk about how are you going to qualify for a Social Security retirement benefit. Of course, at some point over your working career, you had to have worked for employers who paid into Social Security for you. You know this by looking at your pay stub. If you notice that FICA or Social Security taxes are being deducted from your pay, then yes, you are contributing into Social Security. So for this year, for 2026, each 1,890 dollars in earnings, that gives you one credit or quarter of coverage. You can earn a maximum of 4 per year. So in this year, as long as you have grossed at least $7,560 by the end of the year, you get your 4 quarters of coverage. The minimum requirement that I tell people to get something from Social Security is that you have to have 40 credits over your working lifetime. So at a bare minimum, you have worked paying into Social Security for at least 10 years. Then when you are age 62 or older, you are eligible for something from Social Security. So let's try to figure out what that something is. What we do here is, first of all, we're going to weigh those earnings. So say if you had earnings, say in the 1970s, those are going to use a slightly different formula to weigh them versus earnings from today. What I tell people, the most important piece you need to pay attention to is the second step here. This is where we at Social Security, we look at your highest 35 years of earnings over your lifetime that we pull into the calculation. And a lot of people seem to have this misconception of thinking that it is the last 5 or the last 10 years that we pull in to figure out how much you're going to get. That is not true. We look at your highest 35 years of earnings over your lifetime. So, say, for example, if you are that person who only did the bare minimum, you only worked 10 years working, paying into Social Security. And that's fine. We pull in those 10 years of actual earnings, but attached to that will be 25 zeros because the calculation will always be based upon your highest 35 years of earnings over your lifetime. So, of course, the more zero years you have in the calculation, the lower that estimated benefit would be. The result of that is going to be the average index monthly earnings, which basically equates out to how much you're going to get from Social Security. Now, earlier I stated you could start your benefit as young as age 62, or you may elect to wait until your full retirement age. Again, your full retirement age is based upon your year of birth. So take a moment here to find your year of birth in the first column here. The middle column shows your full retirement age. What that means for you is that if you wait until that particular age to contact Social Security to start to take your benefit, you would receive 100% of your benefit. If you choose to take your benefit before your full retirement age, then the Social Security benefit, it would be reduced. And then today, just for the example, we're going to say that your benefit at your full retirement age was $1,000. But if you choose to take it early at age 62, this last column here shows that how much that benefit would be reduced by. So someone like myself, I fall in the last category of being born in 1960 or later. So my full retirement age is 67. I do apologize for that. So my full retirement age is 67. But if I choose to take my benefit early, say at age 62, then off of the rip, there is a 30% reduction because I'm choosing to take this benefit early. So instead of me getting that $1,000 per month, the gross amount of my benefit is going to be 700, and that's going to be before any other reductions because again, I chose to take my benefit before my full retirement age. Now, the next example here shows that my full retirement age is 67, but in this example, it's showing that my benefit would be $2,000 a month. So if I took my benefit early, say at age 62, I'm looking at receiving $1,400 a month. But let's just suppose that I get to age 62 and I'm like, nope, I am not taking my benefit right now. I'm going to try to get to my full retirement age. So I'm just cruising along and I'm keeping working. Then once I reach age 67, when I get to that age, I may decide I'm not ready to start taking my Social Security benefit, and that's fine because I have the option to keep my eyes on the prize and try to max my benefit out all the way up until age 70. But what I want you to know today is that anytime that you wait past your full retirement age, you can earn what we call our delayed retirement credits. This means that you can earn up to 8% for every 12 months that you wait or delay in taking this benefit all the way up until age 70. So if I waited to age 70 to take my benefit, instead of getting $2,000 a month, if you look at the example, you're looking at receiving $2,480 per month. That is the gross amount of the benefit. Please be aware that Social Security, we do not withhold taxes from your Social Security benefit unless you ask us to do so. And if that is the case, we would be able to withhold federal taxes only from your benefit again, but that is only if you ask us to do so. Now, in addition to you, the primary number holder, who else may be potentially eligible to receive a benefit off of your record? Well, of course, your child. As long as he or she is age 18 or 19 and still in high school, or if you have a disabled child, and as long as that child is not married, and we're able to determine that their disability began before the age of 22, they could qualify for what we call as a disabled adult child or a DAC benefit off of your record. In addition to your child, your spouse may be potentially eligible to receive a benefit off of your record. As long as he or she is age 62 or older with little or no work history, and you guys have been married for at least a year or longer, or you may qualify for a benefit at any age as long as you're caring for a child that is under the age of 16 or disabled. That spouse may be able to draw that benefit off of your record. Now, we're going to take a moment to talk about a potential benefit that your spouse may be able to draw off of your record, or it could possibly be that maybe you may be able to draw a benefit off of your spouse's record, especially, say, for example, if you have been working for the school system your whole career and you hadn't worked anywhere else where you paid into Social Security. How this spousal benefit, how it works is that the most that you can ever draw off of your spouse's record while they are alive and well is up to half of whatever their benefit would be at their full retirement age. This does not include those delayed retirement credits, only up to whatever they could get at their full retirement age. In order for you to receive that, you have to be at your full retirement age. Now, if you decided that you wanted to take this benefit early, say at age 62, then of course, because you're taking it early, there's going to be a reduction. So instead of you getting up to 50% of the benefit, you're going to be receiving approximately 30%. How this works is the primary number holder, whether that be you or your spouse, who's ever, number you're trying to get the benefit off of, they have to file their application for their benefit first. Then they have to start to receive that benefit. Once both of those things happen, then at that point, the spouse can then come in and say, hey, I want to file for a spousal benefit. And we're going to say, great. We're going to ask that spouse for their Social Security number because we're going to look to see, is this person eligible for a benefit off of their own Social Security number first? Because that is the intended purpose of the Social Security number, was to track earnings, not all of the other stuff that we use it for today. So we're going to look to see how much is this person eligible for off of their own Social Security record. We're going to look to see, is it less than half of your amount? And if so, then we can combine the two amounts to get you up to half of whatever that person's benefit would be. But again, you have to be at your of full retirement age. And there's a common misconception that a lot of people seem to think that if your spouse took the spousal benefit, it would reduce what they receive. And I'm here to tell you that that is not true. If you've elected for your benefit to be, say, $2,000 a month, then guess what? That's what you're going to get. You're going to get your $2,000 a month. It is not reduced because your spouse is filing for a benefit off of your record now. Now, for those of you who are watching who may be married, take a moment to find your spouse's year of birth in that first column. The next column is going to show what their full retirement age is. And I want to go back to that first example where I said that your benefit at your full retirement age was $1,000 a month. And that would mean that the most that your spouse could get off of your record would be up to half of that, which would be the 500 in the last column. But that third and fourth column shows that if either one of you chooses to take your benefit early, say at age 62, it shows how much it would be reduced by. Now, in addition to you or your current spouse, a former spouse may be potentially eligible to draw a benefit off of your record, but in order for them to do so, they have to meet certain criteria. Meaning, number one, they had to have been married to you for 10 consecutive years of marriage. Currently, they are not married and they are age 62 or older. In this situation here, the ex-spouse, whether it's you or if you're trying to apply off of their record and it's them, that person, all they need to be is entitled to receive a Social Security benefit. They don't have to be actually receiving it, just eligible for it by meaning that they're age 62 or older, or they're potentially eligible to receive a disability payment. And again, what we do for that divorced spouse, we start off by looking to see what can you get off of your own record first. If your amount is less than half of theirs, we can combine those two amounts to get you up to half of their benefit. But again, that divorced spouse has to be at his or her full retirement age. And I think I have a couple of examples here that are coming up. First up, we're going to look at Ricky and Lucy. In this first example here, we have that Ricky, he's receiving $1,200 a month. Half of that is $600. His wife, Lucy, she comes in and says, I want to file for a spousal benefit. So once we check her earnings record, we determine that she's eligible to receive $1,000 off of her own record. So when we do the comparison, she can get $1,000 off of her own record versus $600 off of Ricky's, and we see that her amount is more than half of his. She's not going to qualify for the spousal benefit because she can get more money off of her own Social Security record. So she's going to be receiving the $1,000 a month. So that one's pretty straightforward there. But let's take a look at the next example here with Luke and Laura. In this example, we have Laura. She contacts Social Security. She files her application, and then she starts to receive her benefit in the amount of $1,800 a month. Half of that is $900. Her husband, Luke, he's been receiving benefits for a while now in the amount of $900 a month. Now, because Laura filed and started to receive her money, this now opens up the window of opportunity to allow Luke to come in and receive an additional $300 from Laura's record. So 6 plus 3, that's 900. That's going to get him up to half of her benefit amount. Also, keep in mind that if Luke and Laura have any eligible children, they also would be eligible to receive a benefit from Laura's record. Now, if for any reason Laura were to decide to suspend or stop receiving her Social Security benefit, that extra $300 that Luke is getting, that would stop. It would also stop for the children as well. The exception to this will be the divorced spouse. The divorced spouse will still be able to continue to receive their benefit. Now I'm going to take a moment to transition and talk about the potential benefit available if your loved one passes away. First up, we're going to look to see who's eligible for it. So starting off with your child who is either age 18 or 19 or still in high school, they're eligible to receive your survivor's benefit. Then we have the disabled child. Again, as long as he or she is not married and we're able to determine that that disability began before the age of 22, that disabled child would be able to get that DAC benefit off of your record. Then we have the widow, the widower, or the divorced widow or widower. And they can start to receive reduced benefits as young as age 60, or they may elect to wait until their full retirement age to start to receive a benefit, or possibly they may elect to take that benefit at any age, just as long as they are caring for a child that is under the age of 16 or disabled, because they're going to be able to qualify for that child and care benefit. And then the last bullet here talks about divorced widows or widowers may qualify. But remember, that divorced widow or widower, they must meet the divorced spouse's criteria in order to be eligible. They got to meet that divorced spouse criteria, meaning they had to have been married to you for at least 10 consecutive years. They're age 62 or older, and they are currently not married. So if someone elects to take a survivor's benefit at age 60, then they're looking at receiving approximately 71.5% of the deceased worker's amount. If somebody chooses this option, when they reach the age of 62, we at Social Security, we're going to come back around to look to see what can they get off of their own record. And if the amount off of their own record is higher, then we switch them to the higher record. Now, if someone comes to Social Security at age 62 to apply for a survivor's benefit, then they're looking at receiving 82.5% of the deceased worker's amount. Or they may elect to wait until their full retirement age. This way, they can receive 100% of the deceased worker's amount, but also this gives them the opportunity to leave their own benefit alone, let it continue to grow up until age 70. Then at age 70, we're going to swing back around, take another look to see can they get more money off of their own record at age 70. And if that's the case, then we're going to switch them to the higher record. And then this last bullet just talks about full benefits are available to both the widow, the widower, and the divorced widow or widower. All we're saying here is if the person who passed away, if they had a current spouse, someone that they were married to for at least a year or longer, that person is potentially eligible for a Social Security benefit off of their record. And if they were divorced from someone who meets that divorced spouse's criteria, that person as well would be eligible to receive a benefit off of the record. So, in essence, they both could. We would just have to look to see how much money is available for the family to divvy up between them. Now, one of the common questions we always get with Social Security is everybody always wants to know, can I go back to work once I start to receive my Social Security benefit? The short answer is yes, you can, but you need to know what are you up against. So if you are under your full retirement age, meaning that you started to take your benefits, say at age 62, and then you decided, I'm going to go back to work somewhere because I want to stay active, I want to stay busy, and that employer is deducting Social Security out of your pay. Your earnings limit for 2026 is that you can work and earn up to 24,480 for the year, breaking that down to a monthly amount because you want to make sure you do not exceed the monthly amount as well. Don't go over $2,040 per month. As long as you do not go over, then you're good to go. But if you do, you're going to have to pay back to Social Security $1 for every two that you go over. Now, in the year where you're going to reach your full retirement age, the limit, of course, it goes up. For this year, for 2026, that earnings limit is 65,160 for the year, breaking that down to a monthly amount that is $5,430 per month. Again, as long as you do not go over, you are golden. But this time you would have to pay back Social Security $1 for every three that you went over. Now, when you do reach the month where you're going to reach your full retirement age, then at that point, there's no limit to how much you can work and earn. We tell people all the time, you can make $1 million. Social Security, we don't care. But we also caution people that, IRS is going to care because they're going to have their hand out wanting a piece of the pie from you. So again, I'm going to caution you to make sure you're talking to your financial planner, your accountant, and your tax preparer so there are no surprises as you transition into retirement. Another thing I like to highlight about the numbers that you see on the screen here, when I'm talking about these limits, I am strictly talking about you going back to work either for an employer who's deducting Social Security or FICA taxes out of your pay, or if you choose to be self-employed and you are paying your self-employment taxes. These limits do not include, I repeat, it does not include your pensions, uh, VA compensation, rental income, interest, dividends, any other type of income. That's not this. These limits only talk about if you go back to work. Everything else is not included in these numbers. So just kind of keep that in mind for yourself. The other thing I'm going to talk about with regards to these numbers, and I usually get this scenario right here. Someone will say something to the gist of, I started to take my Social Security at age 62. And I decided to get a part-time job somewhere because, I wanted something to do. And they always ask, what happens to these new earnings? Because remember, they've started to get their Social Security check. It's a reduced amount, and it's based upon their highest 35 years of earnings over their lifetime. So with these new earnings, they're wondering, is it going to make a difference in their check? And the answer is it could. But we do not go back and take a second look at this until you have passed your full retirement age. And like I say, it doesn't happen exactly at that moment, but somewhere down the road, we do come back and we'll look to see, do they make a difference in the computation? If they do, then you're going to get a letter in the mail from Social Security that'll say something to the gist of, this is what we paid you. This is what we should have paid you. We send you the difference in the money, and then you'll have a new payment amount. So yes, we do go back and take a second look at it, but only after you've passed your full retirement age. Because if it doesn't make a difference, you don't get a letter, you get nothing from us. But only if it does will you be notified that your benefit amount has changed. Now I'm going to take a moment to talk about whether or not the Social Security benefit is taxable. And my answer again is going to be, it depends. So what we have to look at to determine whether or not the Social Security benefit would be taxed is you're going to take your adjusted gross income from your tax return. You're going to add to that any non-taxable interest that you may have. And then whatever you're getting in Social Security, cut it in half and add that to the mix. The total there is going to be your combined income. Once you have your combined income, the next question you have to figure out is, how are you filing your taxes? Are you filing them as an individual or as a member of a couple? If you are an individual and if your combined income is less than $25,000, you don't pay taxes on the Social Security benefit. If for an individual, your combined income is between $25,000 to $34,000, you could pay taxes on up to 50% of that Social Security benefit. And if for an individual, your combined income is more than $34,000, you could pay taxes on up to 85% of the Social Security benefit. This is not a Social Security regulation, but an IRS one. And so if you have questions about taxation of the Social Security benefit, we have to refer you over to the Internal Revenue Service, and you're going to go to their webpage there. And the publication that you're going to look for is 554, which is the Tax Guide for Seniors. Again, I'm going to tell you to talk to your accountant and your tax preparer so that you have no surprises with this as you're transitioning into retirement. Now, when it is time to file for your benefits from Social Security, whether you're trying to file for your retirement benefit or if you're trying to file for Medicare, the earliest that you can start the process is 3 months in advance. So 3 months before you're ready to start to receive your benefits, 3 months before you're ready to enroll in Medicare is the earliest to contact us. The easiest way to do so is, of course, via your My Social Security account. And that way you can log on that way and file the application if you choose to do so. Or you can call either our national 800 number or your local servicing Social Security office to schedule a telephone appointment. And let me just caution everybody, or just say, the agency is transitioning into what we call a national calendar, so to speak. So now, even though you may have an appointment and you may have called your local servicing Social Security office, you may not necessarily be talking to someone locally. You may be talking to somebody in South Carolina or California or Texas who may be taking that claim for you. So don't be surprised or freak out. It's just something that we're trying, as the agency is looking at new ways of shifting the workload and kind of having a balanced workload throughout all of the offices, that it may be somebody somewhere else to take that application. But just rest assured, it doesn't matter who you're talking to. Everybody's going to ask you the same series of questions, or even if you filed online, you're still going to be asked the same questions. If at the end of the interview we need anything, we're going to tell you. So if you need a marriage certificate or divorce decree, or if we need financial information for your direct deposit, we will let you know. If you filed online based upon your zip code, that will tell you what local office to get everything into. If you're speaking to a claims representative, they will direct you how to get everything to them. And so even if you're speaking to somebody from another state, they'll still tell you, take these documents, take your original documents into the local servicing Social Security office. You don't need an appointment. They'll have what we call as an express window. Someone will call you up, scan your documents in, they'll give you your originals back, and then they'll send a message to the person who's taken your claim to let them know that you presented the evidence, so that then they can finish processing your case. So rest assured, we got you covered here. Another quick thing I just want to highlight is that if you ever see that 800-772-1213 number on your phone, if that number is calling you, scam, hang up, do not engage, because that is a number where you can call in to us. We never call out on that number. And when in doubt, hang up, and then you find the real number for Social Security and you call us back, but never call them back on the numbers that they provide for you. So just be aware of that, because periodically they're still coming back, trying to run that scam on individuals. Now we're going to talk about when are you going to get your money from Social Security. First thing we need to be aware of is that Social Security does not pay for partial months. You have to be eligible for the whole month. So if you're at age 62 and you're filing for your benefit, if your birthday falls on the first or the second day of the month, we give you credit for that month. If not, we have to take it to the next month. The next thing you need to understand is that benefits are going to be paid, excuse me, the month following the month that they're due. So say, for example, if you contacted us in this month in April and you say you want your benefits to start in April, the first monthly payment is going to be in May. Then depending on your day of birth, that determines the Wednesday of the month you receive your benefit. Excuse me. So if your birthday is the 1st through the 10th, that is the second Wednesday of the month. The 11th through the 20th is the third Wednesday of the month, and the 21st through the 31st is the fourth Wednesday of the month. And I'm going to pause here to see if I have any questions from anybody on what I've covered thus far. And then I'll briefly talk about what Social Security's role and responsibility is with regards to Medicare. So while I wait on your questions, I'll just say what Social Security does with Medicare is very limited. We only do two things with regards to Medicare. Number one, when it is time for you to enroll in Medicare, Social Security is the federal agency that you're going to contact to enroll in Medicare Parts A and B. Secondly, once you have enrolled in Medicare, and you have started to receive that cash benefit from Social Security, then by law, Social Security is required to deduct your premium out of your Social Security benefit, and we send that over to the Center for Medicare and Medicaid Services for you. So the two things that Social Security does with regards to Medicare is we're going to take your application, we're going to take your money. That is it. We're not able to, talk about the different plans, what Medicare covers, because unfortunately, we would need to refer you over to the Center for Medicare and Medicaid Services. But let's take a moment to look at who qualifies for Medicare. First and foremost, anyone who is age 65 or older, anyone who's been on Social Security disability for 24 months or longer, individuals with ALS, and of course, anyone who has permanent kidney failure and receives maintenance dialysis or a kidney transplant would qualify for Medicare. With Medicare, there are 3 different enrollment periods that we need to be aware of. The first up is called the initial enrollment period, or the IEP. What this is your very first chance or opportunity you ever get to enroll in Medicare. It is a 7-month window. It starts 3 months before your 65th birthday, your birthday month, and 3 months after that. Again, is your very first chance or opportunity you ever get to enroll in Medicare. The next potential enrollment period you may come across is the special enrollment period, or the SEP. This is going to be for those individuals who may still be working. And the key to this is, as long as you are covered under a group healthcare plan where you are actively working, or potentially your spouse is actively working and you're covered under their insurance. Somebody has to be actively working in this scenario. And if that is the case, then when whoever has the insurance leave employment, you have 8 months to contact Social Security to enroll in Medicare, and that is considered to be timely enrollment. The last enrollment period here is the general enrollment period, or the GEP. This is every single year from January 1st through March 31st. This is going to be for those individuals, for whatever reason they forgot to enroll in the initial enrollment period, or a lot of times what we'll find out is somebody, they did enroll, but for whatever reason they didn't pay their Medicare premium, so they got kicked off of the rolls, and then they can only re-enroll under the general enrollment period, or it's going to be for those individuals who don't qualify for that special enrollment period. But the thing about the general enrollment period, this is where we look to see whether or not to assess that 10% penalty, because we're going to look to see what was the first opportunity you could have enrolled, to determine whether or not to assess that 10% penalty for every 12 months that you waited or delayed in enrolling in Medicare. Now, with Medicare, you're going to have two different options to choose from with regards to enrolling. You can select Original Medicare, sometimes it's called Traditional Medicare. This will consist of Medicare Part A, that hospital insurance, and as long as you're able to get something from Social Security because you have your 40 credits, then Part A, that's free. It's not going to cost you anything. If you have less than 40 credits, you would have to pay a monthly premium for Part A, and that's just going to be determined by how many credits you do have as to how much you could have to pay. Part B, everybody has to pay for Part B. I believe the base premium for Part B this year, I want to say, is $202.90. I think that's what it is. That is the base premium. And then if you are a higher wage earner, in addition to that, you could have to pay an additional surcharge because you make a little bit more money. On the Original Medicare, you can choose to add on a prescription drug plan, or even a Medigap, or that supplemental policy for yourself. The cost of those are going to vary from provider to provider. Your other option may be a Medicare Advantage plan. This is where a private company is following the rules and regulations for the Center for Medicare and Medicaid Services, and they like to bundle together Part A, Part B. Sometimes they'll throw something extra in, like the prescription drug plan, or maybe even a hearing or a dental plan, all for a predetermined cost. A lot of times their cost is going to be right in line with that 202.90, or it may be slightly more, or it could be a little less. It really depends on the different companies, and this is where you're going to have to do your due diligence to figure out what works best for you. Also, I'm going to tell you to make sure that you're speaking with someone in HR to determine, does your employer require, as you're transitioning into retirement, is there specific, groups or plans that you need to be looking at versus going out on your own, picking something on your own. So just make sure that you understand everything with yourself. And I know that the teachers requirement system, TRS, they do require that when you retire that you do enroll in Medicare. And normally they're going to send you notices. I think it's 2 and 4 months before you reach age 65, just giving you a reminder to enroll in Medicare, because otherwise, I believe what happens if you don't do it timely, then they give you a substantial discount on your premiums, and then they will take that discount away and you'll be forced to pay the full premium out of your own pocket. So just be aware of that and pay attention to any letters that you get from the teachers' retirement system. I have a couple of scenarios we're going to walk through before we wrap this up. First scenario here talks about that if you did start your Social Security benefit early, say at age 62, then when you reach age 65, do you need to come running into Social Security to enroll in Medicare? The answer is no, because what will happen is 3 months before you reach age 65, we're going to automatically enroll you in Medicare Part A and B. You're going to get that red, white, and blue card in the mail, and then the next thing you're going to notice is that money will be missing from your check. So in that scenario, you don't have to do anything. We'll take care of everything for you in that situation. The next scenario we're going to talk about is if you are still working at age 65. And remember, the key to this is that you are covered under that group healthcare plan, whether it's from your employer or your spouse's who's actively working. Um, and what this means again is that whoever has the insurance, when you leave employment, you have 8 months to contact Social Security to enroll, and that is considered to be timely enrollment. But if you're still working, think about this. You may decide to only enroll in Medicare Part A. So you contact us and say, I want to enroll in Part A only. I do not want Part B because I have insurance through my employer. That way, when you do leave your employer, that way you can come back and enroll in Part B without a penalty. Also, pay attention to the note in the middle of the screen that talks about that if part of your benefit package, if you have selected the option of having a high deductible health savings account, what that states is that everybody has to stop putting money into that account 6 months before you can enroll in Medicare Part A, because otherwise you're going to get a tax penalty from the IRS. That means you got to stop and the employer has to stop. You can use whatever's there. You just can't put any additional funds in once you enroll in Medicare Part A. And this is not a Social Security regulation, but an IRS one. So just make sure you pay attention to that if it applies to you. Now, when it is time for you to enroll in Medicare, what I want you to do is visit our website because you're going to get a couple of forms from us. The first form is the L564. This is a form that you're going to give to someone in HR so that they can verify that you always had health insurance coverage. What that is going to show us is that when did your health insurance coverage start and what is the effective end date of that coverage, because that tells us when to start counting those 8 months for you from. It tells us when to start counting those 8 months on that L564. The second form that you need to complete is the CMS 40B. That's the form where you check out what you actually want to enroll in, whether it's Part A or Part B or both. Just make sure those two forms must come back to us together. So think of those two forms as a happily married couple. They can never get a divorce, or as I like to say, peanut butter and jelly, because they got to stick together and come back to Social Security, because if you send in one form without the other, there's nothing that we can do to process your request until we get the second form. And at the point that we get the second form, that's what we'll process your request from, and we will not go back retroactively. So please, please, please make sure that you do give yourself enough time. Send those forms in at least 3 months before you're planning to transition into retirement, because that'll give us enough time to process it and get that Medicare card out to you in a timely fashion, because more than likely you're going to need that card number to pass it along so that then you can enroll into your Advantage plan per whatever you need to do for the school system. And again, let me just reiterate one more time that failure to enroll timely, it could result in a 10% penalty for every 12 months that you wait or delay in enrolling in Medicare. Let's see here. There we go. Okay, so the next scenario talks about if a person is not working at age 65 and they've not started their Social Security benefit, they can file what we call as a Medicare only application. When a person does this, then they're going to have to pay a quarterly premium. They're going to get a bill from the Center for Medicare and Medicaid Services where they'll be required to pay their premiums 3 months in advance. And you're going to pay that directly to Medicare, not to Social Security, to Medicare. And if you want to make sure that your premiums are paid timely, visit Medicare.gov and create a Medicare account for yourself. So that way you can pay your premiums directly to them. And that way you'll see in real time that everything is current and up to date. Then when you do start to take your Social Security benefit, at that point, Social Security will start to deduct the premiums out of your Social Security benefit. Only once you start to receive a benefit from Social Security will we then deduct those premiums. Now, earlier I said that if you were a higher wage earner, you could have to pay an additional surcharge. How Social Security determines that is we're going to look at your tax return from 2 years in the past. So for 2026, we're looking at your 2024 tax return. We're looking to see where does your modified adjusted gross income, where does that fall on the chart that is on the screen in front of you? And then that will determine how much you have to pay for Part B. And if you are enrolled in Part D, how much you have to pay for that. Also, keep in mind that if you have a spouse. And if both of you are enrolled in Medicare, the amount that you see on the screen is the amount that each member of the couple would have to pay. And then here's just a snippet of what the Medicare website looks like. So if you ever want to go there and peruse it, such as looking at what is the eligibility requirements, what does Medicare cover for you, this is going to be a great place to start. And then finally, if you've never seen a Medicare card, here it is, that red, white, and blue card. It will consist of your name, your account number, which will now be a series of letters and numbers. And then, of course, it's going to show you what you are enrolled in, whether it is Part A or Part B, and the effective or the start date of that coverage. And I'm going to take a moment to see, does anyone have any additional questions for me? And I'm just going to say thank you so much for the opportunity to present to you this afternoon. And I do believe we have another day coming up in the near future if you choose to come back and watch it again. And I'm just going to turn it back over to Miss Jones. And again, thank you for the opportunity to be here today. And I'm not sure if she's back or not, but I know this will conclude the presentation. But if you do have and I'm sure I'll make sure I send her a copy of the presentation. So if you would like a copy of it, I'll make sure that it is available to anyone who would like a copy. And again, thank you for your time. And this is going to conclude the presentation. Thank you so much.
Thank you so much. I appreciate all of the information that you provided. Hope you have a great evening.
Was it a 5? Yeah, well, yeah. Okay.
Sheesh. All right.
Let me get out of here.